Hello everyone, welcome to today's video. If you're here, you're probably interested in learning about investing, which is awesome. But maybe you think you need a ton of money to get started. Well, I'm here to tell you that's totally not true. If you've ever thought I don't have enough money to start investing, then this video is for you. For a long time I thought investing was only for rich people, like you need a fancy suit and a Bloomberg terminal to even think about getting started. But that couldn't be further from the truth. You can start investing with just a small amount of money, even as little as $5, and start growing your wealth over time. Today, I'll show you how to start investing with a small amount of money and grow your wealth over time. Alright, so before we dive into all the different ways you can invest with small capital, let's take a step back and talk about some of the basics. It's crucial to build a strong foundation before moving forward. Because honestly, understanding the fundamentals is going to be the key to your long-term success, right? Without a solid grasp of the basics, you might find yourself lost in the complex world of investing. We don't want to just throw money at something without knowing what we're doing. That's a recipe for disaster. First things first, let's talk about the difference between saving and investing. This distinction is fundamental to making informed financial decisions. Now, saving is what you do when you put money aside, typically in a savings account, so you have easy access to it. It's about security and liquidity. This is your emergency fund, your oh crap money, your I need a new laptop fund. It's the money you can rely on in a pinch. It's all about preserving your capital and having it readily available. You want to ensure that you can access it whenever you need it. Investing, on the other hand, is about putting your money to work for you. It's about growth and potential. It's about buying assets that have the potential to increase in value over time, like stocks, real estate, or even starting your own business. These are avenues where your money can grow. And while investing does come with some risk, it also has the potential for much higher returns than simply saving your money in a bank account. The rewards can be significant. And this leads us to our next point: risk and return. Understanding this balance is crucial for any investor. In the world of investing, risk and return go hand in hand. You can't have one without the other. The higher the potential return, the higher the risk. This is a fundamental principle of investing. For example, investing in a brand new startup is considered high risk, but it also has the potential for massive returns if the company takes off. It's a gamble that can pay off big. On the other hand, investing in a well-established company may be less risky, but it also might not have the same explosive growth potential. It's a safer bet. Now, when we talk about investing, we also need to consider our time horizon. This is the period you plan to hold an investment before taking the money out. Are we looking for short-term gains, or are we in it for the long haul? This decision will shape your investment strategy. Short-term investments are typically riskier and more volatile, but they can also generate quick profits. They require constant monitoring. Long-term investments, on the other hand, are all about slow and steady growth over time. They benefit from the power of compounding. The best strategy for you is going to depend on your individual financial goals, risk tolerance, and time horizon. Tailoring your approach is key to achieving your financial objectives. Now let's talk about one of the most common and accessible ways to start investing: the stock market. I know what you might be thinking. Graham, isn't the stock market just for rich people and Wall Street hotshots? But the truth is, the stock market is for everyone. You see, in the past, you used to need a ton of money to buy even a single share of a company like Apple or Amazon. But now, thanks to fractional shares, you can invest in these companies with just a few bucks. It's like buying a slice of a pizza instead of the whole pie. There are tons of apps out there that make buying fractional shares incredibly easy. Some popular options are Robinhood, Stash, and Acorns. These apps have made investing more accessible than ever before, and they even let you start with as little as $5. But here's the thing: when you're first starting out, it's easy to get overwhelmed by the sheer number of stocks available. That's where ETFs come in. ETFs, or exchange-traded funds, are like baskets of stocks that track a particular market index, like the S&P 500. So, instead of trying to pick and choose individual stocks, which can be risky, you can invest in an ETF that holds a diversified portfolio of hundreds of different companies. Plus, ETFs are super liquid, meaning you can easily buy and sell them whenever you need to. Remember, knowledge is power, especially when it comes to investing. Now let's talk about everyone's favorite topic: cryptocurrency. It's a digital or virtual
This video has another part. Please watch it.
Ho ho ho!